Tesla is back in the news today with a lot of news, and some of it quite bullish. We're going to get into it here in this video. We're going to look at the option flows, talk Tesla, where Tesla's going over the next couple of days, delivery expectations, so much I hope you're ready for. If you are, hit that like button, subscribe to the channel if you like my perspective and you want to stay up to date with everything happening with Tesla stock. Blink Charging announced that they will include Tesla chargers in all of their products. This furthermore illustrates Tesla's dominance in the charging field. Cathie Woods recently sold $7.3 million worth of Tesla stock, while the bears point to this as Tesla is being dumped by Cathie. It's a little bit more benign than that, as Tesla is 11.59% of ARK Innovation, and Cathie has publicly stated many times, it's in her disclosures, she likes to keep single stock allocations under or around 10%. And we're still over 10%. But by far the biggest news of the day today, Tesla's Gigafactory in Mexico pushing to open in early 2025. This is a little bit delayed. We were previously expecting production to start in the second half of 2024, but according to a new report out of China, the factory's opening will now take place in the first quarter of 2025. This is a massive factory on 4,200 acres in Monterrey, about 200 kilometers south of the US-Mexico border. One of the main reasons Tesla picked Mexico was the Inflation Reduction Act, which provides incentives to automakers for producing their vehicles in North America, the definition of which includes the US, Canada, Puerto Rico, and Mexico. This includes both final assembly of the vehicles and also parts production. The plant is estimated to cost $10 billion and is expected to employ around 7,000 workers. This Mexico factory is the factory that you are expecting to get the $25,000 Tesla, that mass market vehicle that can almost be bought by virtually anyone. And the margins are expected to be pretty good, as well as lower labor cost in Mexico, a smaller supply chain, things of that nature are expected to bring down margins. And these $25,000 vehicles can also be included with full self-driving for that additional cost. That is really where the profits are going to come from this factory. So a lot of people are getting quite excited about this Mexico facility. In other news, we have Roth Capital Partners senior research analyst talking about why Tesla stock is egregiously overvalued. Yet I have not heard one argument about PEG ratios. We can talk about PEs all we want, but in comparison to big tech, Tesla is actually undervalued by quite a bit. Microsoft's PEG ratio is currently at a 3, where Tesla's PEG ratio is currently at a 1.28. The PEG ratio is calculated by dividing the PE ratio by the growth rate. So Tesla has a much higher growth rate than Microsoft, but about double the PE ratio. So who is really the most expensive company? Obviously Microsoft. Same goes for Apple, same goes for Nvidia, same even goes for Google. Tesla, factoring in future growth, is cheaper than Google. The only big tech name that is cheaper than Tesla is Amazon. We are also getting some updated consensus estimates from analysts for Q2 delivery numbers, which will be released this upcoming Sunday. The new estimate, compiling all of the analyst estimates, is 447,000 units. Barron finds that if Tesla deliveries come in higher than expected, the stock outperforms the market roughly 2/3 of the time between the report and when the quarterly earnings are announced, which will be later in the month of July. So if Tesla can beat 447,000 vehicle deliveries, be north of 450,000 deliveries, the stock is likely to rally from here. And we're actually seeing some signs of this in the technicals of Tesla. Tesla stock recently has experienced a golden cross. That is when the 50 or the 100-day moving averages cross above a longer-term moving average, which most notably is the 200-day moving average. This happened back here on June 23rd for the 50-day moving average and happened on June 27th for the 100-day moving average. Tesla stock bounced when it hit a low of $240 per share and reclaimed that resistance level at $250 per share. Tesla stock is currently at $256.47 per share. At the same time, the RSI has reset in a big way. This will allow Tesla to make that next move higher. And if the options are telling us anything, it's that a lot of institutions are betting Tesla stock rallies into the last trading day before we get delivery numbers. The positive order value for the day is coming in at 69%. You have seen 545 orders on the day from hedge funds and institutions worth $105 million. The volume on the day, including retail investors for the expiration tomorrow, June 30th, is 64% bullish. 64% of the volume today is calls expiring tomorrow. And if you look right here, a lot of these calls are expiring tomorrow with out of the money strikes. You're looking at that 260 strike, that 255 strike, that 257.50 strike, or even the 265 strikes that are being purchased aggressively right now, playing a bounce for tomorrow. Look at some of these other orders, like this August 11th, 325 call, or a July 7th, 270 call, or another August 11th, 325 call. These orders are hundreds of thousands of dollars a piece. It looks like the bullish bets are being placed on Tesla, even as the stock is flat on the day today. Not to mention the short dollar amount that is currently short in Tesla is at $24.13 billion. This is up 40% in the last 3 months and sitting at the highest levels that you have seen in a very, very long time. You're also at a new high since June 15th of 2021 for the amount of shares sold short in Tesla. You have 96 million shares that are currently sold short. You have not seen this in 2 years. This, heading into expected deliveries on Sunday, can lead to some shorts, reducing some of that short exposure coming tomorrow, as that will be the last trading day to do so before you do get the delivery numbers. That could furthermore allow Tesla to have a strong end of this week and thus potentially rallying next week as well. In other news, Polestar is the latest EV maker to announce a move to Tesla's North American charging standard. They join Ford, GM, Rivian, and Volvo cars to join Tesla's supercharger network. They will have access to this network starting in 2025. This furthermore illustrates Tesla's dominance in the charging ecosystem and will eventually over time create a larger and larger revenue stream for Tesla. And this charging revenue tends to be at very high profit margins, as most of the energy to charge these vehicles is sourced locally. And the biggest news of all, what I have been waiting for, Tesla's advertising efforts are shifting into high gear as ads appear on Google. This is a necessary step by Tesla. Because why? The brand itself, the product itself has been strong enough thus far to give us growth rates that you have not seen in an automaker in many decades. The product and the brand have spoke for themselves. Word of mouth has been phenomenal. But Tesla is getting to scale, where a lot of people I know, so I can vouch for this, don't even consider buying a Tesla when they are thinking about buying a vehicle, because they simply just don't know about Teslas. Tesla's not in the right place at the right time. They're not advertising. There's a lack of education out there. So Tesla's brand and product speaks volume so far. They haven't needed to advertise. So now when people start to see advertisements, they start to get recognition of what a Tesla is and the superior product that they have, you're going to see sales and that backlog grow exponentially for Tesla. And that is not something that is currently priced into Tesla stock. Tesla coming on earnings might give us a glimpse on how advertising has been doing. And from my estimates, from my personal expectations, I expect advertising alone, as well as the introduction of the Cybertruck in Q3, could boost Tesla's backlog by 2 to 5x within the next 2 years. We could potentially see Tesla going from this demand problem that was never really a problem but caused Tesla's stock to drop to $100 per share. A lot of analysts still believe Tesla will see a demand problem into a production problem, meaning that Tesla might not be able to produce vehicles fast enough. Imagine what that is going to do for Tesla stock. Again, to provide a little bit more clarity, Tesla is running 18 ads currently for the US as well as the UK. They are also advertising their solar business. Now, these ads are really education purpose, and they're kind of targeting the right demographic. If you go ahead and search for solar, or you go ahead and search for a car, Tesla's ads will pop up. And some of them are acknowledging the affordability of Teslas. Like in the UK, you can buy a Model Y for $44,990, around the average price that people are buying vehicles for, right? And it'll go take you to their website and educate potential buyers on Teslas, or that a Model Y payment starts as low as 395 euros a month. These are things that just a lot of people are unfamiliar with. Or the Model Y has the highest safety score for any SUV. Things of this nature, furthermore, will help educate the public and reach a new audience for Tesla, which is why I think Tesla's order books are going to grow exponentially from here. And these are the solar advertisements that you are seeing. Go ahead, click on this page if you want to look at all of them. I think it speaks for itself. But beyond advertising, I think a lot of you guys just want the stock to go higher, in which I am definitely in that camp. Tesla's stock is flat essentially on the day, down about 18 cents. I think tomorrow, given there is a lot of short positions on Tesla, you could get a nice end of the week move based off of that alone. Tesla stock recently, again, retaking that 250 resistance level could give the stock room to breach over 260 coming tomorrow. And then based on delivery numbers, if you beat 250,000 deliveries, if you really beat 260, that's where Tesla stock can break that 300 level and start to make its way towards 350. When you see these analysts talking about valuations, keep in mind the stock doesn't care about that. These analysts can speak on valuations all they want, same way they did in 2020 when Tesla was trading at 1,000 times PE ratio. Did the stock care about that? No. These analysts are wrong. As we highlighted in the last video that came out, these analysts don't have a clue what's going on with Tesla, and their estimates are way too low. The introduction of the Cybertruck is going to change the game for Tesla. It's going to drive millions and millions of people to Tesla's website, and likely hundreds of thousands, if not millions, of orders will come from that, the Tesla. Speaking of any potential rally in Tesla stock, we are going to get data coming out tomorrow as well, and that could throw a wrench in things. That could make the markets that much more bullish and go higher, or it could be a big negative catalyst. 8:30 in the morning tomorrow is the big time. This is Eastern Standard Time. You're going to get core PCE month over month. You were expecting that to go to 0.3%, down from 0.4% last month, so a deceleration. Personal income month over month, you're expecting that to also decelerate to 0.3%, down from 0.4%, last month. Personal spending month over month, you're expecting that to really decelerate from 0.8% last month to 0.4% this month. PCE price index year over year, you're expecting that to fall to 3.9% from 4.4% last month. PCE price index month over month, you're expecting that to fall from 0.4% last month to 0.2%. And core PCE price index year over year, you're expecting that to stay flat at 4.7% from last month's reading, also at 4.7%. You're also going to get the final Michigan Consumer Expectation Survey numbers, including 5-year inflation expectations as well as 1-year inflation expectations. If this number gets revised on the 5-year inflation expectations higher, that's not going to be a good thing. We recently seen 5-year inflation expectations from the Michigan Consumer Sentiment Survey actually increase. The last number we got was 3%. If this does get revised to 3.1%, or forbid for me for saying this, 3.2%, you're going to show a clear uptrend in 5-year inflation expectations. That would not be a positive thing for our markets. On a positive note, last night, the 23 biggest banks weathered a severe recession scenario with the Fed's stress test. It says all 23 banks, included in the Federal Reserve's annual stress test, weathered a severe recession. The rate of total loan losses varied considerably across the banks, from a low of 1.3% at Charles Schwab to 14.7% at Capital One. Credit cards were easily the most problematic loan product. Banks including JP Morgan Chase and Wells Fargo are expected to disclose updated plans for buybacks and dividends Friday after the close of regular trading. And this stress test started after the 2008 financial crisis. Now, this is a severe recession scenario with unemployment surging to 10% and a 40% decline in commercial real estate values and a 38% drop in housing prices. So this would be pretty rough for the economy if this were to happen. And the conclusion is that the largest banks in the US would be able to still lend money. They would still be able to stay afloat. This is positive in light of the recent banking crisis that we have seen with small and regional banks in 2023. That is going to conclude your update on Tesla as well as the markets today. If you guys enjoyed this video, if you learned something or like my perspective, hit the like button on your way out as well as subscribe to the channel. If you want to go ahead and get yourself some free money, link down below in the description of this video for Webull. Deposit $1 when you sign up. Get yourself 15 free stocks, throw a free stock my way. It's a win-win for everyone involved. If you want to come join our private trading community, link down below in the description of this video as well. Thank you for watching, and I will see you in the next one.